Hello, welcome to another video from 10x Investor Education. Today in this video, I would like to talk about STEM Incorporated. The ticker symbol is STPK, Star Peak Energy, which is merging with STEM pretty soon. So what is STEM? It's an AI driven energy storage and software company operates in microgrid market. The most important thing is it's going to be very profitable soon, 2023, and they announced the quarter results recently. So before getting into the details, I am not your financial advisor, so please do not think as an advice to buy this stock, but I am going to tell how I am buying this stock and why I am investing into the stock. So please click the like button or subscribe at the bottom of the video and turn on notifications. So as soon as Star Peak Energy fell around $20 2 weeks back, I tweeted saying I'm buying Star Peak Energy. So I post a lot of my buys and sells on Twitter at known as RK10X Investing. So you might want to subscribe to my Twitter account. So next thing. So what is STEM? So STEM provides solutions that addresses the challenges of today's dynamic energy market by combining advanced energy storage solutions with Athena, a world-class AI-powered analytics platform. STEM enables customers and partners to optimize energy usage by automatically switching between battery power and grid power. So if you to tell, they have big boxes of storage systems, so they will go and install those to the clients who need them, and they install Athena software, and then they will charge during low peak hours. They charge these battery systems for low price, and when during peak hours, then they switch it to battery, and they use that artificial intelligence software Athena, and then that's how they save electric bill or energy bill to their big customers. Okay, so this is what basically they do. So they are basically into microgrids, software, and then mainly hardware, battery systems. That's where they get their revenue. So there are a bunch of competitors, but in my view, they are going to grow like crazy in next couple of years, because mainly in infrastructure plan, clean energy, and modernizing the grid plan under Biden. So that is the reason why I'm investing. And certainly, obviously, they are still priced high, $30. The good price I will tell you in a minute when I'm going to buy and how I'm going to buy. So let's get into the details of the company more. So, just yesterday they announced the quarter results. Okay, summary is STEM revenue more than doubles in 2020, 10% above outlook provided at the merger announcement. So whatever they announced, they actually beat it by 10%, and also undoubled the revenue compared to previous year, and I'll show you how the projections for the next year. So what the CEO was saying is, the past year we have experienced a tremendous business momentum exceeding our revenue target. The growth we achieved was driven by solid execution and a lot of aspects. So this year and next year they are still staying with their guidance to a complete previously merger with Starpeak early in second quarter of 2021, which means anytime next 1 or 2 months. And also it's going to trade under symbol STEM. So, and also they are staying to their target of 2021 achieving financial target. So this is very good news, and a lot of SPACs do not have this kind of growth, and also do not kind of stay to their targets. So look into briefly, let me look into, this is a 48-page article, investor presentation released a few months back. I'm not going to get into the details. Quickly look into some of the details. If you look at it, so this is, so Star Peak overview, we are not interested, and they're obviously talking about how the climate change is the problem. So a revolutionized grid with STEM is the solution basically. So STEM is the first pure play smart energy storage company to go public. That is true, because a lot of companies, actually the companies that went into public, or a lot of them they're hardware companies, battery companies. But whereas STEM is energy storage company. So and they're talking about $1.2 trillion market, total addressable market, and there are a lot of competitors in it. So to give you a summary, this is what STEM is. So hardware plus network integration, and then software Athena system, and battery optimization via Athena AI. So this is how they make their money. So if let us say some big company asks, hey, we need to reduce our power bill, they'll go install some of the systems, and then they connect it to the network, and then they install Athena and they monitor and they reduce the electricity bill. So if you look at here, obviously they are talking about lot of companies, how they fit into a lot of companies. But the real, if you look at here, some of their competitors, including Tesla. So they are the biggest in that market. I will show compared to Tesla how many installations they are doing, and this is how their storage system looks like. So on 24 patents granted, so it's a real company. So software, this is all spectrums of how segments they get their revenue from, and this is how they are showing when charging from the grid and actually discharging from the grid. So think of this one as a non-peak hours, they're charging from the grid, these battery systems, and during peak hours they release energy and shift the load from the grid. So this is the customers. So obviously Walmart, Amazon, UPS, Simon are biggest. Obviously Simon malls, they need a lot of energy. Walmart needs energy, Amazon needs energy, and a lot of other Fortune 500 companies they have. And this is how their sales channel, distributor channel, and a lot of project developers. Okay. So this is obviously no debt, and they have 525 million cash available through this SPAC. So a lot of the founders are coming from different companies, including GE, Siemens, and First Solar, and other companies. So they are talking about, obviously, if you have heard about CleanSpark, which is more of a software company, but this is more of hardware plus software. As you can expect, there are a lot more competitors than hardware. So the hardware gross margin is only 10 to 30%, whereas software is where they are the biggest platform. They expect margin to be 80% here. Okay, so this is how the revenue coming from software and hardware. So this is the expectations between, so 2020 revenue is 33 million, and 21 I expect they already have a lot of bookings for this one, so there is no issue in meeting targets. So 147 million, and 2022 315 million, and obviously growing in 5 years they are going to go to $1.1 billion revenue. So if you look at here, the compared to addressable market and free cash flow, 2021, 22 and 23 is where they're expecting free cash, and even I'm surprised, I won't be surprised even if they actually become positive cash flow next year. Okay, so this is the most important thing I want to talk about, is because they're competing in a lot of companies in this spectrum. Okay, so if you take it, energy tech companies, they're competing with Tesla here. If you take Bloom Energy and ChargePoint, they're competing infrastructure, because they install the ChargePoint also needs these storage systems. And the distributed solar companies, SunPower, Sunrun, they compete, and also technology, solar technology companies. They these are all big companies, very successful companies. You can look at the share prices, how they went up in last couple of years. So this is good competitors being in a good field. That's good to know. So this is valuation benchmarking. Okay, so this is summary of the investor presentation. So let's look into how the stock price went in. So at the peak it crossed more than $50. As you can see, volatility is very high. That is why my favorite, I can make good money with volatility with options. So if you look at 52-week range is $51 and $10. So it peaked $51, and then after the announcement, and it went all the way to actually $21, $22 during 2 weeks back, and then it came back to $30. So anywhere between 30 to 25 is decent price, and especially after merger stocks goes between 25 to 20, that is the really best price. So I'm talking in terms of a long term appreciation. So short term, yes, you will see these fluctuations, but long term is what I am looking for. I'm not investing for short term in this company at all. This one use case where this is how STEM actually saves money for their clients. So if you look at here, one of the customer is Intercontinental Hotels. So if you look at here, this is from area director of engineering at Intercontinental Hotels. So basically saying I have increased my return of investment by about 300% using the data. I like doing something that's good for the grid, but this is good economics too. So basically saves money to the client, saves money to the grid, and also reduces their electricity bills. And if you look at here, another one is like saving $860,000 for a granite construction company. And one of the equipment managers talks about Athena is a key to making system function, as it can monitor the grid and know when to switch to battery power. The other companies we considered are battery storage, had similar storage systems but lacked Athena's AI capabilities. So this is the reason why I'm very bullish, because making this kind of software, it's not many companies can enter into, and almost STEM took 10 years to get to the stage where they are right now. So, and if you look at the competition, STEM named the top California commercial energy storage installer. So in California, which is where they try to go green compared to other states, so STEM is the top one storage installer. So if compared to the rest of the other companies, so if you look at here 2019, STEM had like 106 installations. The next one is Arrow Energy is 15, and Tesla is 40, and then SunPower is 9. So just to give you a comparison. So this is all positive aspects of STEM. So I would like to see the real competition and what's going and what are the risks by investing in a company. So if you look at here, so that if you look at this, an article from Despite risk, investor place. Despite risk, Star Peak Energy looks poised to be long-term winner. So this is exactly my point, is for long term. So even if you buy today at 20, 25, so if it goes to down for me, and this is more like 4 years investment. The reason is because the market that they are in, and there is a competition. Here is the competition. So if you look at here, one of the company's competition, as I said, Clean Spark. The other one is American Superconductor, which is also growing with their capabilities, and its going stock price also really went up close to 200% in 1 year. So their main customers are like all companies: UPS, Walmart, Amazon, SPG, and as we already saw this. So if you look at the toughest competition is Itron, ESCO Technologies, and also one of them is they are talking about is, if this is a niche field, so easily Generic Electric and Nexter Energy could enter into the market and competing with STEM. So this is obviously the risk and tough competition, high valuation, which is obviously still in high valuation company, because it's that's how they are rated. But compared to a lot of other SPACs, STPK stock is trading at price to sales ratio at 16, which is quite expensive, I agree, but compared to a lot of other companies, this is not too expensive in my view. Especially this article was written when stock price was around $45, now stock being $30. Potentially, obviously for me, I still will not buy at this price. So my previous purchase was around $22. So if it comes to below 20, around 25, I probably buy more, but I am looking for post merger and price stock drop close to $20. That is where I am hoping it will hit it with $4 billion market cap and add more. But until then, I will be selling puts at $15 and $20 buying the premium. So that is how I'm doing. If I buy the stock, I do sell covered calls, because I sold covered calls before at $60, $70 target price in 1 year. But otherwise, if it falls down, I buy sell puts. So this is how I am trading STEM. Hopefully this video is useful, and hopefully you might like to invest in this company if you're long term clean energy microgrid player. If you want to, again, the risks are, as I said, first a SPAC risk, and also there is no for a short seller report on this one like a lot of other companies these days. As you can see, short interest is only 6%. So these days these SPACs are short sold by a lot of people, big hedge fund companies. So you have to be risky short selling. But this is one company, even if it goes to $25, when market comes up, it'll come back to big time. So that's what I'm hoping. So hopefully you like the video. Please click the like button, and see you on my next video. Thank you.